So welcome in everybody. This is another great Avalanche Spaces to talk all things tokenization, and got a great lineup here to talk about tokenizing venture market strategies. And we got two amazing guests here. So we're gonna let the guests kind of introduce themselves, and then Morgan will take it away from here. We also just want to remind everybody, once again, of course, you all know this, but this is just for information and informational purposes only, and nothing that we say here in the discussion in the Q&A can be construed as investment advice or financial advice. So make sure you're always doing your own research, and all the views expressed here are of the individuals on their own. So we're going to kick things off. Let's go to Jamie if you want to say hello and give us a quick intro.
Hey guys, Jamie Finn here, president and co-founder of Securitize. Been at this since 2017 when we founded Securitize. Been through a few different cycles, and here at essentially what we're doing is working with a variety of different firms to create tokenized products. We've worked with ParaFi, Hamilton Lane, KKR, and BlackRock recently to bring a variety of products to market. Just excited to be here. Thanks for the invitation.
Excited to have you here as well, and I appreciate you taking the time out. And then let's go over to Ben. If you want to say hello and tell us a little bit about yourself.
Maybe while Ben sees if he can get to a better spot, I'm happy to introduce myself and kind of set the stage, and then I'll hand it over to Ben to do his introduction. But like Kyle said, really exciting to be here as always with you guys. Good to see everyone for those that are already involved in the Avalanche ecosystem, and welcome to those who are just kind of dipping their toe in and really learning about not just the Avalanche ecosystem, but in particular where me and my team and a lot of us in the ecosystem are focused, which is on tokenized assets. Last week, if you guys remember, we were talking about culturally relevant assets around film financing. Here,
hey,
we're
can you
really
guys
going to
hear
be
me now?
talking.
Sorry about that.
Yeah, he dropped off. So keep going, and I'll add him back up here.
So in the meantime, really going to use this session to talk about a very different type of asset, which is tokenized venture fund, and we'll go into, especially with Jamie here, what it is, why is it tokenized, what are the benefits, how should investors and issuers be looking at this space, and kind of really get into the nuts and bolts. And do want to spend some time talking about just Securitize overall and how you guys have been contributing to really the advancement of the adoption of blockchain, smart contracts, tokenization. What does that mean, and why should people care? And then we'll spend some time obviously talking about ParaFi, because I think a lot of people in the crypto and broader digital asset community are familiar with ParaFi, but for those who may not be, want to really understand kind of the crux of how ParaFi came to be, what are their strategies, what's kind of driving them to make this decision to tokenize part of their newest venture fund, and kind of what are the views and thoughts ahead. But before we go into that, maybe should we see if Ben's speaker is working now?
Yeah, can you guys hear me now?
We can.
So just as context, I'm the founder, managing partner of ParaFi. We're about a $1.2 billion asset management firm focused exclusively on blockchain and digital assets. My background is in traditional finance. So I spent 10 years in private equity and credit. And for me, tokenization is really, I would say, one of the most fundamentally important things in the entire digital asset space. We really kind of view blockchains as financial infrastructure at their core. And most of what's moving on top of this financial infrastructure to date has been things like, DeFi tokens and stable coins and, endogenous kind of layer one assets like AVAX, Ethereum, and so on. But really, I think to expand the space, what we're going to start seeing is that the vast majority of assets on blockchains will be tokenized real world assets. And really like the kind of for us, tokenization is really just formatting. It's putting a traditional asset in the format of a token. So formatting is very important for a variety of reasons, and there are a lot of things that get us really excited about it. And that's what drew us to ultimately tokenizing our venture fund, the sleeve of our venture fund, working with Avalanche and Securitize. So we can dig into it in detail, but that's just on a high level why we're here.
Cool. Thanks for that, Ben. And very happy that we can hear you now. And maybe can we dig into that actually a little bit more? Because I think in kind of learning about your background, you came particularly from the alternative asset management space where things like, private equity, credit, real estate or infrastructure be part of the reason that I think a lot of people, and Jamie, feel free to chime in, but like a lot of people are focusing on private market assets in the first instance from like a tokenization standpoint is because they are private, they are probably the least standardized and most kind of operationally intensive to administer from, in terms of the way that like they're traditionally administered. So I'd love to understand, just given your background coming from that space, when you think about whether it's tokenization or blockchain or smart contracts, kind of being the upgraded infrastructure for, for TradFi, are there certain like pain points that you ran into when you were in TradFi, whether it was certain processes or certain things that you feel like this tech could fix? Like really interested in just like your personal view and experience, just given where you came from. And really would love to kind of hear your take about, specific examples of where you feel like this tech could really kind of help upgrade things.
Yeah, definitely. I mean, I think like what first intrigued me about blockchain, and this is like 101, right? There's a bunch of other dimensions to this, but just atomic settlement, right? So in traditional finance, settling a loan trade can take up to 30 days. And the only departments that have really grown at banks over the past decade have been back office and compliance. Settlement costs have actually increased around 15% year over year for banks for basic securities. And like 5 to 10% of all trades every day are, busted trades that need to get reversed. So even though it's something that I think many take for granted, especially people that kind of have grown up in crypto native in this space, the traditional finance system just does not have atomic settlement. You have bank A and bank B that each keep their own ledger, and it takes days to kind of settle and reconcile. So for me, that atomic settlement component is completely critical and core. So that's kind of one point. The second is with private assets, as you point out, Morgan. This is a $12 trillion market for alternatives. Think about things like private equity, credit funds, venture funds, and so on. And it's a very fast growing part of the full asset stack globally, and every this entire part of the market is basically governed by PDF legal documents, where you subscribe to a fund, you fill out legal documents, and then there are fund administrators and that are effectively kind of providing you with documentation that memorializes your investment. If you want to sell your investment over the life of a fund, you have to, fill out a transfer and assignment agreement, which is a legal doc. It's very complex and it takes time and it involves legal fees. And so what's kind of exciting, again, just like at the very basic level, is the ability to kind of transfer a private interest to someone else and have atomic settlement is I view really as 0 to 1. And then in terms of things like capital calls, distributions, fund administration, there's a lot of complexity there, and this really gets to the plumbing of how these private market vehicles work. Is it tends to be very inefficient, and using the benefits of a kind of programmability and what we've seen in DeFi, I believe that smart contracts can really streamline a lot of those kind of basic fund functions. And I'll let maybe Jamie speak to this in more detail because Securitize actually runs a fund administrator. as well. So there's a bunch more, but at a basic level, those are some of the things that I think are a big advantage of tokenizing a venture fund.
I think I see Jamie.
Yeah, I mean,
Oh, are you here? Oh, okay.
oh
Sorry.
yeah,
It says
I'm here,
listener
just
for
hanging
some
out.
reason, but please go ahead.
Well, I'm an active listener. Um, no, I mean, I think Ben, you're making some great points about uh, kind of the operational side of it, but I think also it's worth addressing this from the investor's point of view, and the reason I actually and one of the reasons we started Securitize was because I loved venture capital and I had zero access to it. I couldn't buy into it. I didn't know the right people. I just didn't have access. And Carlos, my co-founder, was trying to do a tokenized venture capital fund, and I just wanted to get into the asset class in general. And so, because of this new approach, and all the points you made are very true. Being locked up for a decade is scary. Not being able to get any liquidity in the middle, the paperwork, all those things are very real and very scary as you're kind of entering this space and investing in venture funds for the first time. And the fund and this format really addresses it and makes it so that you have a much easier to transact in product, and a number of new kind of capabilities coming down the line. We've definitely already seen trading happen. Our most popular products that trade are actually the venture funds, so Spice VC or Blockchain Capital, and I'm sure ParaFi in a few years will be in that same kind of space. And so I think it's a really great opportunity for investors to get access to the space, and blockchain just makes it much easier to transact and to prove you own it. And once you can prove you own something and you have the provenance, there's a lot more things you can do with it. So those would be the points I would add.
I actually think, Jamie, you mentioned a really good point in terms of, part of the reason why you kind of came into the space and really leaned in with Securitize is the fact that you historically didn't have like systematic access to whether it's venture, frankly, for a lot of like, the growing kind of accredited investor market in the US and globally just doesn't have kind of systematic access to alternative investments. And even if they do, just the investment minimums are just so prohibitively high. So I think like
Yeah.
the way that we look at it, and I think you guys would agree, is it's not like if you tokenize something, then you can lower the investment minimum. It's all the things I think that like Ben mentioned in terms of, automating a lot of the operational things, which traditional alternative asset managers do to not KYCing and all that stuff, but it just makes it economically feasible for you guys to lower investment minimums, which is the thing, obviously, that like provides this access. So I look at it like very holistically, and I think it's really interesting, and it's to your point, the more you can have a greater number of investors with lower investment minimums, lower ticket sizes, obviously it sets it up for a nice secondary market, and further kind of benefits from there. Um, Maybe before we go into kind of the specifics of the tokenization, let's spend a little bit more time, Ben, just on ParaFi itself, especially for those who might not be familiar with the fund and the various kind of strategies. Would love to hear from you about how you guys look at scoping out various investment opportunities, particularly for your venture funds. I know you guys have a focus, obviously, on tokenization, on infrastructure, especially as it relates to kind of TradFi, but would love to kind of just get some insight from you guys in terms of how you guys look at the space, how you scope out different deals, what is interesting to you, and then we can go from there.
Yeah, definitely. It's interesting because as a firm, I think ParaFi is known for being very early to DeFi. Back in 2019, we seeded a lot of the largest DeFi protocols that exist today, and we actually, like, at the time when we started investing in DeFi, it was called crypto finance. Like, the term DeFi hadn't really come up yet, and really, I found it fascinating that you could, you know. Basically use smart contracts and if then functions to kind of mimic financial activity. And so we're pretty active users of DeFi, investors in DeFi, and that was really like the heritage story of ParaFi. Today we have different strategies across the firm. One of them is venture capital, and the way we kind of think about the space is, we actually think that in order for the industry to kind of 10 to 100x grow from here, you really need to, bring, Web 2 companies and financial institutions into play, and you need more, like you need more customizability of blockchains to allow these institutions to use them. And I think Avalanche is set up perfectly for that. Candidly, I um, where we're focused as a fund is really investing in both protocols and companies that are, the way we like to frame it, is increasing the GDP of blockchains. If you think about like how you measure the productivity of a country or an economy, it's like through this GDP formula, right? Consumption plus investment plus government spending, exports minus imports, right? We kind of view blockchains as really being their own economies. And so like we want to invest in like real industrial kind of pragmatic use cases for the technology. So whether that's infrastructure to tokenize real world assets, whether that's, front ends that make smart contracts and institutional finance easier to do on chain, whether that is, lending and borrowing infrastructure. We certainly kind of, I would say, have a more financial lens, just because I think finance is the use case for blockchain that's most near term in terms of product market fit. We have things like stable coins already that are basically at parity with Visa's settlement volumes. So that is our kind of primary focus. And just the story, I mean, I think like we've always kind of tried this technology, and because we've invested in over a dozen teams that are building tokenization infrastructure, we thought it would be a bit almost like hypocritical if we didn't use it ourselves. And that's like typically the best way to really understand any technology, is to you actually have to use it. Otherwise, you're kind of just pontificating about it. And you learn a lot when you actually use it. That's kind of what led us to DeFi in 2019. And so for us, like tokenization is really the, very important to nail as an industry. And so we want to be really just like on the front lines using the tech. So yeah, that's a little bit about like kind of how we decided to tokenize, but also like what the types of deals we invest in at ParaFi.
And we'll definitely get into like the tokenized fund itself, but maybe before then, you guys had made an investment into Securitize in their most recent round. Is that right?
Yep, that's
And
correct.
so, and you mentioned Securitize as a TA. So maybe Jamie would love to kind of hear from you. And you mentioned this too, but like give us a rundown. And I would consider Securitize as like a piece of kind of like key infrastructure within the Avalanche ecosystem. But especially for those who might not be as familiar, give us a rundown of Securitize. What are the different kind of components? And then we'll go into the ParaFi fund itself.
Sure. Yeah, I mean, Securitize, like as you mentioned, we have a number of different parts of our business. Tokenization is obviously a key component, but what we discovered, because we started out as a sort of a technology vendor, with just tokenization software, and what we rapidly discovered is that was not enough, and so we went and got licensed and registered for a variety of different licenses here in the U.S. We're also working on some on a pan-European basis. So we are, as you mentioned, a transfer agent or a TA. Transfer agent's job is to keep track of who owns what tokens and make sure that transfers are done properly and meet kind of the rules and requirements that are out there. So, that's one thing that we operate. And, I think that the best example of that is, we have a digital transfer agent, which is our main kind of product, but we also have a traditional one because we are always trying to migrate historical funds and clients onto the new platform. And our traditional transfer agent has about 20 odd employees, managing everything in a traditional way. Our digital transfer agent, which does everything with smart contracts, has one person who works in that business. So it's exponentially more efficient operationally. and it's all handled through smart contracts. We also are licensed by FINRA and the SEC as a broker dealer, and we're able to deal in digital asset securities, which just means we can sell tokens. And not a lot of firms are actually licensed to do that. It's a very specific type of license you have to get for that. And then, in Europe, we're working under the pilot regime, the DLT pilot regime, to get a pan-European license. What's most interesting about the European operation is it is a little bit more native blockchain compared to the US one. In the US, we still have to maintain what's known as a golden record off chain. In Europe, that's not required. And so, with that license there, the blockchain will actually act as a golden record. Whereas in the US, we have to keep kind of a record off chain as well. It doesn't affect anything operational, that it's just more of a philosophical kind of difference. People want to be purely on chain with nothing off chain. Get it. Regulations here in the US don't quite permit that yet. The transfer agent rules haven't been updated in 30 years, and they're not exactly priority to get updated by the SEC. So I don't think we'll see that changing anytime soon. But regardless, those are some of the different services. And then what that comes down to is we operate a website or a portal where you can go on board with us, create a Securitize ID. Over 500,000 people have done that already. And once you have a Securitize ID, you can look at the different products that are for sale through our broker dealer, and then purchase the products, or you can go to the secondary market or a trading platform where you can buy and sell tokens as well. And everything is, just pretty easy to use, doesn't require a ton of crypto savvy to use it. That's one of the areas we spent a fair amount of time, is making it easy for people to buy and use these different products. And so those are the different services we have. And yeah, happy to answer any other questions you might have, Morgan, about that.
I think it's really interesting that you mentioned the difference, Jamie, between Europe and the US, and that in parts of Europe, like you can, that golden record is the blockchain, right? And so you can have a kind of
Yeah.
digitally native asset, and if you compare that with having to like dual administer something, then obviously that adds costs in a lot of ways. So the more I think the industry can push toward this like digitally native or blockchain native issuance, I think that's really, to your point, you
Yeah.
said there was one person managing the digital TA. So
Yeah.
that's
Yeah,
huge.
exactly.
I remember I was at an asset manager, and I won't name names, but they literally said they have someone with like a manual notebook, like crossing off capital calls.
Uh-huh. Yeah.
So,
It doesn't surprise me. I mean,
yeah,
when you get into the bowels of the operational side of this stuff, it's pretty
that's a
scary.
good way to put it. The bowels of the operational side. I'm going to use that. So let's talk about the ParaFi fund in particular. Just for the audience, would love to understand like what is the dynamic between Securitize and ParaFi in terms of this fund in particular, and tell us a little bit about like the process of tokenizing part of the fund. I think Ben, you mentioned part of this initiative was really, what's the term, like you're dog fooding your this investment, like
Yeah.
it's you're not just talking the talk but you're walking the walk, which I think is like kudos to you guys for doing that and experiencing it firsthand.
Yeah, I think like I've never understood the phrase dog fooding, but I guess it's like a Silicon Valley
Totally.
phrase, like effectively eating your own
Yeah.
cooking. Although like dog food kind of implies that like your cooking isn't very good.
In Europe, they call it drinking your own champagne, if that makes you feel better.
Oh, I feel like that's
Yeah,
better. Let's
I
use
like
that
that.
term.
Yeah, I like that. I like that better. But yeah, we've been following Securitize for 7 years, kind of back since the founding of their firm and the work that they've been doing in the tokenization space. And I remember like back in 2017 during the ICO boom, I mean, there were a lot of firms that were like trying to tokenize like real estate or tokenize like a dorm in South Carolina or apartment in Queens,
Oh,
and
yeah.
they would like kind of fractionalize them. But like the issue is there was no actual demand for fractionalized shares. There weren't great kind of KYC protocols on chain. There weren't great wallets. We didn't really have stable coins at scale. Like there were a whole host of reasons why, like maybe back then it was too early. And Securitize, props to Jamie and Carlos. Like they basically have like hunkered down for many, many years and solved this tokenization problem, which like it sounds easy in theory. Oh, like let's tokenize an asset, like press a few buttons and it's tokenized. It's actually like a very, very, very complex set of technical, legal considerations. And so we were following Securitize for many years, and finally, and unfortunately, like, didn't make an investment earlier, but was fortunate to kind of keep the relationship going with the team there, and then ended up investing as part of their recent round that was led by BlackRock. And what I think is interesting about Securitize, I mean, they have so many different businesses, but really they've built trust with institutions. So, BlackRock, KKR, through have chosen to token. Can you guys hear me, or did I get disconnected?
Yep.
Okay.
Very good.
Yeah, so they chose to tokenize through Securitize, and I previously worked at KKR, and so when they decided to tokenize the sleeve of their fund on Securitize, I really leaned in because I know just it's not easy to get things across the line at that firm.
Yeah, that's the understatement of
And
the year.
so yeah, was fortunate enough to invest in the round, and then we said, hey, we really ought, as we were learning about tokenization in the context of digging into Securitize, we said, hey, we really ought to do this ourselves. It's also something that many of our LPs have asked us about, and so for us, this is we really viewed this as the first step in a long journey. This is like this initial step is a pilot, but being a champion and pioneer in this technology and asset class, like we want to double and triple down in the coming years as we kind of continue to grow as a firm as it relates to kind of tokenizing different types of products.
And James, let's hear from you. I know it was definitely more than pushing a few buttons, but tell us a little bit about kind of that process, and again, kind of like the relationship between Securitize and ParaFi as it relates to this fund in particular. Is it a feeder fund? Like, what is the structure, and what does that look like? Who is it available for? Tell us a little bit about this particular kind of issuance.
Yeah, sure. So there's a little more than pushing a few buttons. I think one of the main, constructs of funds in
Sorry, was that
general.
for Jamie?
Yeah.
Yes, but obviously, Ben, feel free to jump in. But yes, it was for Jamie.
I think with funds in particular, like one of the tricky bits is they're not unitized, and that seems like a silly thing, but most funds don't have a single unit that you buy, especially venture funds, right? So the first step in tokenizing anything is really to create a unit that can be that's fungible, that you can basically transact in. So that's a really important concept. It's a modification of any kind of standard offering documents to create this kind of unitized concept. It obviously does exist in public funds, but not in private funds. And so that's really the first step of the process that you have to work through on the legal side, which Ben mentioned earlier. And then, additionally from there, just making sure you do the offering properly. So, in the case of ParaFi's fund in particular, we're able to speak about it now because the fund has concluded its fundraise for that vehicle. And so that product was we did it as a feeder fund where Securitize Capital, which is our exempt investment advisor, subscribed to the fund as a vehicle, and then we sold interests in that vehicle to investors. And so the way that works is it's what's known as a feeder fund. And in this case, we sold it just to US investors, and they had a couple of criteria. One, we had to already know them, so we couldn't go out and solicit investors. We couldn't run like an ad campaign on the internet saying, hey, buy ParaFi's fund, because it was sold under regulation called Reg D 506B. or you need to know the people that you're selling the product to. And then additionally, this product in particular was for qualified purchasers. So folks, with $5 million net worth. So it was a very, very specific kind of audience that it was addressing with this product. Venture funds are frequently, this is kind of a standard structure for many venture funds that you'll see out there. It's one of the reasons why it's hard to know that these deals are being marketed and sold. Is because you kind of have to know somebody. So I think there's still a lot of growth and a ton of opportunities to kind of expand access to more folks. But a great way to get access to these products is just register on our website. Once we know you for 30 days, then we can talk to you about stuff. Before that, we can't. So 500,000 people have done that, and so that's kind of the first step is just having the access, and then really from there, it's a question of packaging the product properly, selling it properly to investors, and making sure that everything kind of works together.
Yeah, I think that's interesting. I think also, you mentioned, Jamie, earlier, kind of the potential for a secondary market, and I think we're very much obviously in this stage focused on, okay, how do we cultivate the demand side in the first instance, right? Because if you don't have that, then you're obviously not going to have a secondary market down the line. But I think just anecdotally from my perspective, as we've grown and seen the kind of the tokenization landscape grow, not only on Avalanche, but in the industry overall, I do feel like this time is different. I mean, Ben mentioned earlier, like the last cycle, people were tokenizing like random dorm rooms, and there's obviously not necessarily demand there. But when you're talking about something like ParaFi, like there inherently is product market fit and interest in this type of fund, right? And so I would say overall, like over time, not just has the infrastructure evolved, but the asset supply that is being tokenized has definitely improved with the likes of ParaFi and KKR and BlackRock and others kind of entering the space. But still, I would say the demand side, even though it's been improving dramatically, I think there's definitely a long way to go there. But I'd love to hear from you, Jamie, and Ben, feel free to add in, but how you have seen the demand side evolve. Like from my standpoint, I've always thought that we really need to start integrating these things into like traditional distribution channels. And I know, Jamie, you guys had acquired before On-Ramp Invest, which is like an RIA platform. So talk to us a little bit about, like, from your side, especially since you've been doing this for so long, like the evolution of the demand and distribution side of things. Would love to kind of get your take on like the lay of the land now and where you think we might be going in the future. And obviously, Ben, would love to hear your take as well.
Yeah, I think it's been a really interesting time. As you mentioned, like there's been a lot of testing of different products, different audiences, and I think initially security tokens were kind of born of the ICO raise like thing that was going on, where people were just out there selling tokens to anybody. And I think ICOs were really interesting because they proved that you could raise capital from the whole world. I think obviously some of the things that went on with them weren't great, but the idea of a global audience is really interesting for capital formation and raising money. Now, what we've seen is, and what we kind of our initial theory was, we're going to take traditional assets, sell them, tokenize them, and then sell them to investors. And we weren't really concerned with brand or who they were, and that didn't really work because we had crappy products that people just weren't interested in, and it just didn't resonate very well. We didn't sell very much, and so we went down the path of, okay, we're going to get great asset managers, the best asset managers in the world, and sell it to traditional investors. And we've spent the last 18 months or so doing that with some success. I think we're north of about $50 million in AUM through SEC capital of capital that's been raised through there. So some success, not a huge success, because what we really discovered was there is a humongous demand for traditional assets being sold to crypto natives and crypto native firms. And that's really where we see the demand right now. And we see that growing. And as that audience becomes more sophisticated, we naturally see a big, huge growth opportunity with a lot of the traditional asset managers coming on chain. So I think what you see is the BlackRock product is kind of set the table. And, that went from zero to $500 million in about 40 days and continues to grow. And it's, I think been a solid asset for the crypto overall. But then what that's caused is a ton of interest from those investors for different financial products. So, private credit, hedge funds, venture funds, all sorts of different like CLOs and other kind of vehicles that they're looking at, which had been created in crypto, but they didn't really have anything behind them. And so, the idea here is you kind of take the best of both worlds. You take a high quality yielding asset and then sell it in a marketplace that's much more sophisticated and liquid with just better technology. And that's kind of the market that we see developing over time. And that's where we think you'll get just a ton of scale. And we'll be in, hundreds of billions of dollars, if not, close to $1 trillion here in the next few years. So I think it's a massive growth opportunity right now. And I think every asset manager out there is trying to do something. I think ParaFi was, grateful that Ben got out there and did something, because I think a lot of people spend time thinking and not doing. And once you start doing it, you realize it's not easier. It is easier, and it's a better format. Therefore, maybe the next fund is just tokenized, and that's the only way you can buy it. And so that's what we see is just kind of fully tokenized funds moving away from feeders over the next few years. So hope that helps.
Yeah, and just to echo that, I mean, we really view kind of tokenization as we think about the adoption curve. I think it's very much a gradually then suddenly phenomenon where, we're, right now in the phase of like kind of fine tuning, kind of the go to market. And right now the reality is owning a tokenized asset. What I'm looking for is like different asset verticals that reach critical penetration in terms of ownership, whether it's like things like carbon credits or claims or LP interests in certain fund verticals. The more penetration in terms of tokenization as a percent of those markets, the more coming on chain actually becomes a necessity. And the more people that are on chain, it's just like owning a telephone. Like if you're the only person on earth that owns a telephone, well, you can't call anyone. It's not a very useful technology. Every incremental person who owns a tokenized asset, that like ownership becomes more useful. There's more liquidity. There's more acceptance of that token standard. And so, we're like, if you look at tokenized assets on chain today, we measure it at roughly 11 to 12 billion. It's up maybe about 65% over the past year, which is fast in traditional markets by any measure, but in crypto it kind of seems slow. But for me, this is we're going to wake up, I think at the end of this decade and see very meaningful amounts of assets tokenized on chain. I think stable coins are really kind of like the grandfather of all tokenized assets, because it's basically, if you think about what a stablecoin is, it's just a dollar put in the file format of a token. And those have very meaningful product market fit. And so if you can kind of like, treasuries are the next kind of step down, and then you have this whole like longer tail of all sorts of different alternative assets. And I think the end state here is, if you think about kind of the superpower of crypto, it's this idea of composability. So it, right now, like if you think about how many places you hold an asset, right? If I were to like ask like a typical person, like where do you hold assets? So they say, well, I have a bank account, I have a brokerage account, I have, I did an angel deal, so I signed this PDF document, I have my car title, I have my airline points, I have, they would maybe list like a dozen or so different places where they hold assets, but none of those systems or databases actually speak to one another. They're all separate. And anyone that's like gone and gotten a mortgage and provided like proof of assets to their lender kind of experiences this. Like these systems don't talk to each other. So the idea of kind of putting, money, assets, content, identity all on like one kind of shared global ledger is kind of like the end state of where I see things going. And obviously there's a lot of work to get there, but assets are like very fundamental to that. So, we're still early, but I think like a lot of the fine tuning and a lot of like the infrastructure has been laid, and now we're in the phase of like institutional trust, and like BlackRock and others are really and Securitize are really kind of moving the ball forward. So the last thing I'll say is if there's I spend a lot of time talking to like large institutional allocators and financial institutions, and there's fairly consent, universal kind of consensus around the benefits of tokenization. I don't think anyone's really kind of disputing that. And after SVB last year, there was like just a surge in interest, and it takes time for institutions to like get off the starting line. But I think we're really making progress now as an industry, and like I think it's just a matter of time till we kind of really scale this part of the space.
Thanks, guys. So I definitely agree in terms of like what that target state will or should look like. I mean, obviously, the whole kind of beauty of DeFi is, the composability, the ability to move your assets from one app to another, and then be able to trade them, borrow against them, all those things that, frankly, are kind of like operationally annoying or even impossible using traditional rails. I would be curious to hear your guys' take, though, where there are certain things from like a technological standpoint. It's all like everything that you're describing, Ben, today is possible today from a technological standpoint, i.e., you can have assets, moving across the DeFi ecosystem, borrow against them, trade them, so on and so forth. But obviously, when we start talking about securities, that adds a whole other layer of complexity as it relates to accredited investor, qualified purchaser, KYC, transferability. Obviously, Securitize is a broker dealer. Is there a world where they let their assets move to a different protocol or broker dealer, or rely on a different broker dealer's KYC? Like really kind of being able to realize and accept that kind of composability within the confines of, again, like the laws, rules, and regulations that exist. Would be curious to hear your guys' take in terms of if and how you see those worlds kind of converging. Is that possible? And how are you just thinking about that kind of evolution as it relates to, I would say, I guess, like leveraging security tokens, real world assets in the world of DeFi?
I'll let Jamie kind of do the heavy lifting on this question, but I think that for me, KYC and really on-chain identity is the next big unlock. And I think you need permissioning at kind of like the sender and receiver level. You need it at the validator level of any network. You need it kind of also at the smart contract level in terms of who can launch different financial products. But I think to kind of get to Wall Street scale, you need like a web of kind of whitelists and different sub environments that have different rules. And in terms of like where tokens or assets can move, I think that those are critical. And then the last, in addition to identity, it's privacy, right? Because no one wants their full trade blotter visible to all their competitors. And so that I think identity and privacy are like really kind of like the big technology unlocks that are getting solved.
Yeah, and I think from our side, I mean, in terms of portability and tokens moving, that happens. In our system, then things are not locked in. They're on public blockchains, and they can be used in a variety of ways. We've seen, collateral use cases. We've seen some transactions like we've traded securities on other marketplaces. So there's other broker dealers that trade securities that were issued by Securitize. Like for example, Spice VC at one point traded on INX and Securitize simultaneously. We had another one. Aspen Coin was issued by Securitize, but only traded on T0. And so there's a number of different interactions that have happened. The issue is like, where is the liquidity? And that's what most people are kind of interested in. And at this point, when the market's kind of nascent, you don't have a ton of liquidity, and so bifurcating it and putting in a bunch of different marketplaces is difficult. You really want to pull it together so that you could have deeper liquidity. But it's an evolving space, and I think there's a lot of these transactions really are not well understood. Like what kind of transfers can happen. I'll give you an example. This is not related to ParaFi's fund. This is related to Spice VC. So, a venture capital fund that's sold under Reg D 506C to accredited investors after 1 year can actually be transferred to retail investors. So you can take an AI product and make it available to a retail investor. And so for trading purposes, and how do you do that? How does it work on the system to make sure that everything is kind of being properly transferred? And then you're still limited by the amount of investors you can have in a fund, but the rules change depending on how long somebody's owned something. So it's a developing space, and transactions in private funds are not tremendously well kind of understood exactly where the limits are, and I think that's what we're going to spend some time kind of learning over the next few years.
That's actually a good segue. I guess as we look ahead, would love to hear from both of you guys in terms of like what's particularly interesting or exciting to you as you kind of either look at your own strategies or just the space writ large. What are some of those things that you're particularly excited for? I think for me, I mean, it's been very interesting to see, and Jamie, I think you alluded to this, like literally everyone and their mom is issuing tokenized money market funds. And I just think it'll be really interesting to see as rates start to decrease, what and how will we see in terms of the space evolve? Like what other kind of, obviously we're talking about the venture fund here, but like what other assets will be brought on chain that potentially might be more interesting than money market funds, especially in like a low rate environment. So I'm just interested to see kind of how that space evolves, and also to see some interesting like utilities that are built on top of tokenized assets. Like it's been well publicized that partners like Ondo and Mountain Protocol are using BUIDL, for example, as collateral, and then kind of expanding utility from there. So would love to just hear from both of you, like what are you particularly excited for in the let's call it for like the next year, and what does that look like?
I mean, I can jump in there because if you go last, then I might not have anything to say. So, I mean, what we're really interested is making DeFi work for these types of securities, and we're spending a lot of time to figure that out. We have some really interesting ideas that we'll be trotting out over the next few quarters, and just testing and learning and seeing how that market can evolve. I do think, a lot of people who are creating the same product over and over again, like money market funds, are skating to where the puck was, not to where the puck's going. And I think you have to anticipate where the market's going, and because getting these assets on chain does not happen overnight. It takes 9, 18 months to get something out there from one of these large asset managers. And so if you're just getting around to doing a money market fund, you're too late in the market. It's already happened. It's already been done by the biggest asset manager on the planet. So it's really where is the puck going, and that is really about yield and providing different vehicles for investors to be able to access yield and liquidity. And those are hard. It's a hard combination, but when you find them, there's great opportunities for significant growth.
Yeah, that's I would totally echo that. I think one of the areas like our team has been focused on closely is, tokenization of things that don't have capital markets today. So if you think like a lot of the tokenization activity has been in assets that like the banks handle, right? Like treasuries, private credit, LP interest, things like that. But the other interesting market, one of the ones we've been focused on, are things like, physical collectibles, which is a $300 billion global market. Everything from, tokenized watches to tokenized baseball cards. And basically, like through tokenizing, like everything gets a QSIP, right? It gets like this unique identifier, and it can be moved around and used as collateral. I think someone tokenized a watch last year and borrowed against it on chain. But I think the ability to kind of like organize tokenized collectibles on chain and kind of give them a new capital market is very interesting, because you're almost like skipping over the traditional rails entirely, and there are pretty passionate communities within these niches. So I think once one of these niches hits kind of product market fit or meaningful penetration, you're going to start to see venture capital funding chasing others. And it can also, it doesn't have to be physical collectibles. I mean, it can be just assets that don't really have as much coverage on Wall Street. So things like, agriculture or litigation finance claims, just like kind of like more, or emerging market receivables. So things that are smaller markets that have been less institutionalized can almost like just skip over and move on chain. We're seeing a lot of interesting experimentation there. And then I think that, look, like I would echo what Jamie said in terms of, I really want to see the DeFi composability and functionality take hold with these assets. So being able to use them as collateral. Crypto is just incredible type of collateral because it can move 24/7, 365, and it's all visible on chain. And so, being able to kind of borrow or prove ownership in a tokenized asset, I think is 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 um, is like going to end up being a big use case. And then the other area that I've been interested in recently, because you've seen some product market fit there, is on-chain messaging. So it's actually like one of the problems in traditional finance that's not well understood is just shareholder communications. I mean, even communicating with, our investor base. I mean, people are changing email addresses. We're getting spam or bounce backs, or people are leaving firms and rejoining. It's actually like a complicated problem. And so I think being able to streamline communications with large shareholder bases, um, or investor or LP bases if you're a manager, as well as facilitate governance and voting on amendments on chain, is something that's, the tech is like right there. It's like almost like a UX issue. And so with these, I imagine like in a future state of the world, I wouldn't be surprised to just see all communication between issuer and shareholder really flow on blockchain rails. There's some interesting protocols that are kind of solving that problem. And again, like if you transfer your asset to someone else, you no longer receive the notices or governance rights. Those move to the new buyer of the asset. So there's no kind of updating like contact info on a general ledger. It really streamlines that part of the process.
So definitely a lot to look forward to, which I think we're all kind of excited about. I would be remiss if the last question I had wasn't why Avalanche, which we didn't even talk about, and I'm thinking like let's kind of touch on that as kind of like our parting thoughts. I'll open it up to both Jamie and Ben. Would love to kind of just get your take in terms of the decision to kind of deploy this fund on Avalanche in particular. I know, Ben, you mentioned earlier the kind of the customizability from a network standpoint, which I know a lot of our partners are drawn toward. But would love to hear from you guys directly in terms of what kind of drove that decision, and then we can wrap up.
Yeah, we cast a wide net in terms of thinking about what the appropriate blockchain was long term. I mean, because this is it's a 10-year plus fund, so we really wanted to. That was a big consideration, right? This is going to be tokenized for a decade, right? So we wanted to be very thorough. So one is like, look, Avalanche has sub 1 second finality. And it's deterministic finality. So basically what that means is like once a transaction is confirmed, it's immutable and finalized quickly. So it's basically fast and it's cheap. And if you have a chain that has like slower confirmation times or reorgs, that could lead to uncertainty in ownership transfers that you just like, it doesn't really work for finance, right? So Avalanche was like really checked those boxes, in a way that we didn't see anywhere else. And then the second point I think is really, Morgan, what you brought up, which is just the customizability of the different chains. So, subnets, and I know the nomenclature is changing, but can be just designed for different regulatory regimes. There can be permissioning at different levels of those chains. You can incorporate different jurisdictional rules. So I just think that flexibility long term was really relevant. And then also just in terms of kind of like KYC options and whitelisting options, like those, because of that customizability, you kind of have you have the ability to incorporate those, which was necessary for us just from a compliance standpoint. The last thing I'll say is I think Avalanche has really been a leader in kind of tokenized RWA projects. KKR tokenized on Avalanche. Many of the largest institutional firms are choosing Avalanche. And so as we think about that, like what the world looks like 5-10 years from now, we kind of want to be on the chain that all the other institutional assets are on because of the network effects and composability. Like we don't want to be on an island. And so because I think the more people that choose Avalanche, it makes it incrementally easier to also choose Avalanche. And that definitely informed our thinking as well.
Yeah, I would just say, for a product to be successful, it has to be better, cheaper, and faster. And I think Avalanche is.
Nice and succinct. Awesome. Well, I'm conscious that we're 2 minutes over, so want to just thank both of you, Ben and Jamie, for joining us and giving us your insights and your inputs. You guys are and have been and continue to be great partners in the space. So thank you so much for joining. Thank you to our audience for joining and listening in. We will be posting a replay of this session for any of your friends who may have missed it. Kyle will be posting that in the coming days. But just to wrap up, thank you guys again for joining and really look forward to continuing the relationship.
Thanks, Morgan.
Thank you.
Yeah, thanks everyone. Appreciate it. We'll have the recording up soon. So stay tuned for the next spaces. And yeah, thanks to our speakers for coming by. And thanks, Morgan, as always. All right. Have a good rest of your day, everybody. See ya.